They did it again. Canada has just leapfrogged the United States in the high-stakes race to mainstream cryptocurrency investments, and the surprise is sending shockwaves through the entire financial world. Why does it matter so much that one country would launch a spot XRP exchange-traded fund while another lags behind? And what on earth is going on with American regulators who seem stuck in a never-ending cycle of delays and confusion? Today, we are diving deep into this fierce competition where major influencers like Coinbase Chief Legal Officer Paul Grewal, big-name investment firms, and legislative bodies in the United States are all fighting to push crypto adoption forward, or conversely, hold it back. Trust me, you do not want to miss this. First, let us lay out exactly what has happened and why it is so extraordinary. As we speak, Canadian markets have introduced not just one, but two spot XRP exchange-traded funds. These offerings have opened the door for both retail and institutional investors to track the real-time performance of the fourth-largest cryptocurrency by market capitalization without needing to directly hold any tokens themselves. If all this jargon is making your head spin, do not worry. The core of it is simple. Canada launched an investment vehicle that lets you gain exposure to XRP in a straightforward way, bypassing many of the technical and regulatory headaches. Meanwhile, the United States, once revered for its speed and agility in the tech world, has again been caught blinking while others surge ahead. Let us start at the beginning of this saga. Many people still remember the excitement in early 2021 when Canada became the first nation on the planet to approve a Bitcoin spot ETF. That move felt like a thunderbolt, not just for North America, but for the entire crypto space globally. Suddenly, it was possible for investors to get into Bitcoin via a neat traditional market vehicle, rather than dealing with complex wallets or the risk of losing private keys. Even folks who were lukewarm on cryptocurrency could appreciate the convenience. Fast forward nearly 3 years later, the United States finally followed suit with its own Bitcoin spot ETF in early 2024, dragging its feet behind Canada's lead for quite some time. You might recall that it took the involvement of heavyweights like BlackRock and years of persistent effort from Grayscale before American regulators at the Securities and Exchange Commission gave that crucial green light. Now, the same story is happening all over again, but with XRP, minus the multi-year wait for the United States, we hope. The point of frustration is that lawmakers and regulators in the United States seem unable to keep pace with Canada's quick, decisive approach to crypto oversight and product approvals. Coinbase's chief legal officer, Paul Grewal, is voicing what many industry insiders have been quietly, or not so quietly, saying for a while, that the United States authorities are stifling innovation by dragging their feet on approvals and failing to deliver clear, consistent regulation. Let us break down some of the interesting angles in this ongoing race. For instance, it is not just Canada that is stepping into the spotlight. Brazil's Hashdex has also introduced a vehicle allowing exposure to XRP. Then you have Purpose Investments and 3iQ, two Canadian asset managers, stepping up to the plate with their own spot XRP ETFs. One launched under the Purpose brand, and the other is from 3iQ, both on the Toronto Stock Exchange. Next thing you know, the cryptosphere is buzzing with headlines. Canada dethrones the United States again. Meanwhile, if you dig deeper into the developments, you learn that Ripple itself, one of the giants in cross-border payment solutions, has financially supported at least one of these Canadian funds. That drives home just how significant and potentially game-changing this development is, not just for speculators, but for the real-world use cases of digital currencies. So, how did we get here? Let us look at the environment in the United States. The top regulatory body for securities, the Securities and Exchange Commission, led by Gary Gensler, has taken a notoriously cautious approach to greenlighting crypto-based products. Some would argue that caution is warranted. Others see it as the agency's refusal to adapt to the times. Then there is the legislative labyrinth. Different committees, from financial services to agriculture, are all wrestling over how digital assets should be categorized, taxed, and supervised. Amid all this, the so-called Clarity Act, also referred to as the Crypto Market Structure Bill, is supposed to carve out a definitive legal framework for cryptocurrencies. The bill has moved forward recently, but many in the industry, Paul Grewal included, feel that it is moving at a snail's pace. Let us not forget about the Genius Act, which made waves when it passed in the Senate. Some folks thought it would be the perfect solution to unify and modernize the laws around digital assets. However, even that legislative win did not change the fact that Canada was already surging ahead with real-world products, real investor participation, while the United States remained stuck, waiting for agencies to build the framework. Sound frustrating? You bet it is, especially for American-based crypto companies that risk losing their competitive edge if they cannot serve customers as effectively as their Canadian counterparts. And so, we keep coming back to the big question. Where does this leave the average crypto enthusiast, the curious investor, or the finance-savvy viewer who wants to understand the bigger picture? On one hand, it highlights the risk of regulatory fragmentation. If the U.S. does not catch up quickly, we could see some of the most vibrant crypto innovation shift to places like Canada or even further abroad. On the other hand, it does create an interesting scenario for forward-thinking investors who might explore cross-border opportunities. Imagine if you are American and feel that your domestic markets are too restrictive. You might look north of the border or across the Atlantic to seize opportunities that do not exist at home. But does this mean the United States is doomed to fall irrevocably behind in the crypto race? Not necessarily. We are currently witnessing certain positive signals that America might be poised to get off the bench and play some real offense. The Crypto Market Structure Bill, championed by multiple legislators, aims to eliminate the vague and often contradictory guidelines that have plagued American crypto businesses for years. And let us not forget about how certain major corporations, like BlackRock, were able to secure approvals for Bitcoin-based products in the U.S. eventually. If the momentum behind these visible successes continues, it could pave the way for a wave of additional ETFs linked to altcoins like XRP. Still, as Paul Grewal has stated repeatedly in interviews and tweets, the regulatory approach leaves something to be desired. Coinbase, one of the largest crypto exchanges in the world, has faced the brunt of unclear guidelines and has even had standoffs with the Securities and Exchange Commission over what is permissible. That begs the question, if a behemoth like Coinbase struggles to get the clarity it needs, how are smaller players supposed to navigate these waters? And this leads us to the broader topic of who benefits and who loses under a system with inconsistent regulations. Look at Canada. It approved the Purpose Bitcoin ETF back in 2021, and it did so in partnership with the Ontario Securities Commission, making global headlines for a bold first move. That same sense of leadership is now showcased again with the XRP ETF. This fosters an environment where local companies, as well as international businesses looking for a friendlier regulatory climate, can take root. Meanwhile, the American crypto enthusiast may find themselves shut out, or at least delayed in seizing certain opportunities, if the U.S. environment remains unclear for too long. Now, if you are finding this entire conversation intriguing, let me just say, if you feel the same spark of curiosity about the future of crypto regulation that I do right now, give this a thumbs up and share your thoughts. Staying engaged and vocal could be exactly what the space needs to encourage more transparent rulemaking. After all, the more individuals dive into these developments, the more likely we are to see robust, common-sense regulation emerge. Back to the real-world implications. Two spot ETFs for XRP are now trading on the Toronto Stock Exchange. Imagine you are a Canadian investor who has only dabbled in more conventional assets, stocks, bonds, maybe a few commodities. You go to your broker and see that you can now buy into an XRP ETF. That click, that simple addition to your portfolio, is a potential watershed moment. You no longer need to worry about setting up a digital wallet or converting fiat to crypto through an exchange you may not fully understand or trust. You have got a straightforward financial instrument in a well-known market. This convenience can draw in a wave of mainstream investors who previously might have steered clear of such a volatile and technologically intimidating space. When we talk about mainstream adoption, this is exactly the kind of use case we refer to. The blending of traditional finance apparatus, like brokerages and regulated exchanges, and the new frontier of digital currency. As soon as an investor can incorporate an asset like XRP or Bitcoin via the same platform used for their retirement savings or their taxable brokerage account, a line is crossed. The divide between so-called crypto bros and mainstream finance shrinks significantly, potentially opening the floodgates for liquidity, which can bring both stability and more attention to these digital assets. However, the entire conversation would not be complete unless we examine the potential risks. Spot ETFs, while convenient, do not let the investor directly hold the underlying crypto. That can be good, removing the burden of custody, but it also means that you lose certain freedoms, such as easily moving your crypto into different wallets or participating in decentralized finance. Furthermore, investors still rely on the fund manager to handle the assets responsibly. If something goes wrong, you do not have the immediate recourse you might have if you held the crypto in your own wallet. Meanwhile, bridging back to the United States, the calls for clarity can be heard loud and clear. If the Clarity Act does indeed finalize a comprehensive framework, future ETFs, whether they be for XRP, Ether, or other emerging tokens, might flood American markets in short order. That would give U.S. investors similarly easy access to top crypto assets, but only time will tell. And the timeline remains uncertain as discussions churn in various government committees. At the heart of this tension lies the question of who gets to decide how fast or slow the crypto sector can evolve. In some ways, the approach taken by the Canadian authorities has paved a path of swift acceptance, with enough guardrails to keep major mishaps in check. The purpose. Bitcoin ETF was a huge success in garnering interest without generating any major fiascos. This likely boosted confidence when the conversation turned to approving an XRP-based fund. As for the United States, agencies like the Securities and Exchange Commission and the Commodity Futures Trading Commission are still ironing out who has ultimate authority over different digital assets. That bureaucratic wrangling alone has contributed significantly to the delays. Interestingly, some lawmakers are beginning to question whether the United States can afford to remain so cautious, especially given the global race to adopt blockchain technologies and incorporate them into mainstream finance. There is a growing consensus among certain political figures that failing to act might cost the country both capital inflows and top talent, as innovators pack up and head for friendlier shores. Paul Grewal, in his capacity as Coinbase's chief legal officer, has consistently hammered home the message that clarity is essential for the health of the sector. He suggests that clear guidelines and stable regulation would draw in responsible actors and weed out the bad apples who thrive in legal gray zones. But how does all this tie together for you, the viewer or reader, who simply wants to know where this is heading and why it is so important? The short answer is that the tug-of-war between quick, decisive moves, as seen in Canada, and more deliberative, sometimes sluggish progress, as in the United States, could define the future shape of cryptocurrency on the global stage. A decade from now, we might look back and see these approvals, or these delays, as critical turning points that determined which nations became the epicenters of crypto innovation and finance. Now, I know this conversation can get heavy. We are talking about legal frameworks, international competition, and transformations in digital finance that can make your head spin. But let me spark your imagination for just a second. Picture a world in which almost every major cryptocurrency has a spot ETF or a similar regulated investment vehicle. Your retirement fund, your everyday brokerage account, and possibly even your local corner bank might all offer some unexposure to digital assets. That is the kind of seismic shift we could be on the verge of experiencing. While Canada is giving us a preview of that world with its greenlighting of new crypto-based ETFs, the United States is still forging the path ahead for itself. If the Genius Act and the Clarity Act film strips of legislation can prove their worth, we might see a much more robust American crypto ecosystem in the near future, where the likes of Ripple, Coinbase, and other innovators find no shortage of support. The question is, will that happen soon enough, or will the hesitance open the door for more agile jurisdictions to swoop in? If you love exploring questions like this and want to be part of an ongoing conversation about the future of investing, technology, and regulation, go ahead and hit that subscribe button or follow along for our next deep dive. That way, you will never miss the latest twists and turns in this ever-evolving story. By staying informed, you become part of the change. Right now, all eyes are on the Toronto Stock Exchange to see how the Purpose XRP ETF and the 3IQ XRP ETF perform. Will they attract waves of new capital? Could they possibly stir the pot and ignite renewed conversations among policymakers in the United States? Paul Grewal's pointed statement, essentially that the United States needs to catch up, will either age like fine wine if American lawmakers take swift action or become a clarion call for those disappointed at the inertia of U.S. regulators. The ultimate takeaway? We are witnessing a moment in crypto history, one where the line between mainstream finance and blockchain-based assets grows thinner by the day. And whether you are an investor, a tech enthusiast, or just someone who loves following big societal shifts, it is tough to deny the drama in this cross-border race. Canada, forging ahead with one of the world's first Bitcoin spot ETFs and now continuing with XRP-based products, demonstrates what can happen when a market is open to innovation yet still mindful of risk. The United States, a titan in global finance, is learning that even a powerhouse can be slow to adapt if internal structures and regulations lag behind a tech revolution. As for what happens next, no one can say for certain. Maybe the United States will pass a wave of legislation and catch up by launching its own spot XRP ETFs under a new, friendlier regulatory framework. Maybe the next big news flash will be about Ether or some other altcoin, or maybe we will see the US continue to wrestle with half-hearted measures, losing more momentum to countries that are quicker on the uptake. One thing is sure, the contest is far from over, and every new product approval or legislative breakthrough adds another chapter to this riveting story. When this battle is finally settled, if it ever truly is, financial historians might compare it to other great turning points in global markets, such as the spread of derivatives in the 80s or the explosion of internet stocks in the late 90s. Except this time, it is happening at breakneck speed, riding on the crest of an entirely new innovation, blockchain technology. Cryptocurrency is no longer a niche curiosity. It is a major factor in modern finance, and each regulatory green light or red light carries enormous weight. We have reached a juncture where all the new acronyms, CLO, ETF, CFTC, SEC, OSC, might sound overwhelming, but behind those letters lie powerful institutions and frameworks shaping the next era of economic development. If the U.S. truly wants to hold on to its long-standing leadership role in finance, it may have to accelerate how it approves and manages these emerging products. Failing that, the momentum could permanently shift to friendlier jurisdictions, leading to a new status quo in which multiple nations share the spotlight. Will that necessarily be a bad thing for the global economy? Possibly not. But for American investors and entrepreneurs, especially those working in crypto, the wait for clarity is painful. One has to acknowledge that, in the midst of all this, the Clarity Act and the Genius Act represent genuine attempts at progress. The fact these bills even exist signals that lawmakers understand the need for a consistent legal framework. But legislation can be a slow, messy business, often balancing conflicting interests, from protecting investors to encouraging innovation, from preventing criminal activity to fostering free markets. Each of these concerns requires thorough debate, which is precisely why the U.S. often ends up trailing when it comes to swift product approvals. Nevertheless, the success of Canada's approach does not guarantee a catastrophe for the U.S. It simply highlights a contrast in style and speed. The OSC effectively played pioneer with the Purpose Bitcoin ETF, and now Canadian regulators appear more comfortable with approving additional crypto-related funds. Meanwhile, every new motion or bill in Congress is dissected by analysts and lobbyists on all sides, from those who believe in the transformative power of crypto to those who fear it could destabilize markets or enable illicit activities. For Paul Grewal, the message is painfully clear: the U.S. must step up. And for everyone else, be it a curious observer, a hardcore crypto trader, or an institutional investor eyeing the growth of digital assets, these developments are both thrilling and nerve-wracking as they shine a spotlight on how new technologies clash with old systems, requiring thoughtful adaptation at each step. Imagine for a moment we find ourselves in 2026, looking back on this period. Will we see the great pivot when U.S. legislators and regulators finally caught up to their Canadian counterparts, unleashing a boom in crypto ETFs of all stripes? Or will we see the ultimate missed opportunity, where the U.S. dragged its feet so long that other nations, Canada among them, seized the advantage, raking in investment capital and forging the path for the future of digital finance? That lingering sense of uncertainty is precisely what makes this story so riveting. There are heroes, villains, and a lot in between, depending on your perspective. On one hand, you have innovators pushing boundaries, and on the other, government bodies exercising caution to protect everyday people from unscrupulous schemes. Somewhere in the middle, you have everyday folks who just want fair access to new investment opportunities. This conflict, innovation versus regulation, speed versus deliberation, is playing out in real time. Regardless of your personal stance on crypto, it is hard to deny that these developments hold incredible implications for the global economy. Right now, Canada has an edge. Tomorrow, it could be the US that surprises everyone with a single regulatory stroke, bringing crypto investments into the mainstream. Elsewhere, other nations watch and learn, preparing their own rules to either woo or repel this rapidly evolving sector. And that is why you should stay alert and informed. By keeping your finger on the pulse of these transformations, you take an active role in shaping how crypto's future intersects with your own. Perhaps you will even see a chance to influence the decisions that matter through your votes, your business pursuits, or your investments. Because in an ever-shifting global landscape, those who adapt are the ones who thrive. So, let us keep watching, waiting, and analyzing, because the next big twist in this story could be right around the corner.